Hi, it's Ron Sitrin here. I'm with Hixson of Preferred Insurance Solutions, and we're here to talk about one of the most exciting topipics anyone can think of: insurance.
Insurance?
Yes, I want you to
You
talk
gotta
about.
be kidding. That's why I went into it. Is it wasn't exciting.
Yeah. Well, a lot of people don't know this. When I was choosing not to be a CPA anymore, and what my next profession would be, was either going to be a realtor or insurance. So I chose realtor.
You picked the right one.
I don't know. Anyhow, let's get to the point here, right?
Okay.
Insurance, most boring thing to talk about. However, it's really important for people to have.
You gotta have it.
You gotta have it. So people live in a house, and sometimes they're like, something happens and they think, okay, I want my insurance company to pay for it. But insurance companies aren't going to pay for everything. And what is sort of the threshold that companies use to decide whether it's going to be covered or not?
Well, the key phrase that we use is sudden and accidental. And by that, it has to be something like a storm, a fire, a theft, something that happens immediately.
All right.
It doesn't cover things that deteriorate over time. You know, it's expected that the homeowner is going to keep the house up and maintain it.
Okay, so I have an old roof, it's an old roof, and then one day it leaks. That was my fault because I didn't maintain. I have an older roof, but a serious winds happen, a tree limb falls on it, and now it leaks. That's more falls into that category.
Right, it has to have something sudden and accidental that starts it. And then if things happen after that, it's covered. Like if rain comes in after a tree falls onto the house and it does a lot more damage, it's going to be covered.
Got it. Next part. So people have lots of people coming in and out of their houses, workmen's or friends. Something happens to somebody while they're on your property. How does insurance work in covering for that?
Yeah, that's covered under liability insurance, which is part of the policy. Okay.
Right.
The liability covers you if you're neglectful, or if you're at fault, or you don't maintain something. Like let's just say you don't fix a stair, and somebody's coming down the stairs and they fall. Then that's going to be covered if they sue you under liability.
Got it. And then as far as coverage of just personal property, watches, jewelry, other things, how does that typically work under these policies?
Well, it's part of the package policy. You
Right.
have like 75% of your dwelling amount covers your personal property. And what will happen is it actually covers it on the premises and off the premises. 10% of what your total personal property coverage is goes off premises. So that helps you. And one of the most common things is a lot of people don't realize that if you have something stolen out of your car, it's actually covered under your homeowner policy or renter's policy instead of under the car policy.
Yeah, and make sure I had that happen recently, so it's
happens
good to
a
have
lot.
that. Yes. So one of the things we hear a lot about is umbrella policies, and that even goes beyond the policy just to help protect people's net worth, I guess. Is that
Yeah,
the best way to describe
if somebody has a lot of assets or they make a very high salary, it's really important to carry like an umbrella policy. And the reason for that is it allows you to sleep at night. If you end up being, negligent, or if you're at fault in an accident and somebody sues you, if you have a lot of assets or you're making a high income, they could come after you for more than what your normal insurance is. An umbrella policy helps protect those extraordinary claims, and it gives you the peace of mind that your assets are going to be protected.
Got it. And then, so for many people when they buy a house, one of the things they hear a lot about is PITI, that's principal, interest, taxes, and insurance. So insurance is one of the new monthly costs that homeowner is going to have to absorb. What typically is adding up to that cost? How do you factor in the cost for insurance?
Well, insurance is really determined by the location that you're buying in, by the age of the house, and by the loss experience of that area. And then you can vary the cost a little bit by using deductibles, because that's a form of self-insurance. And if you're looking long term, it's always a good idea to have a higher deductible, because that means you're not going to turn in small claims, which can create more surcharges and that kind of thing.
Right.
So that's the best way to work it.
And I always hear, if you call up and say you have a claim, but it ends up being below the deductible, does that still work against the homeowner now that they've just called in and informed?
Well, in like our case, we're an independent agency, so we encourage people to call us first and let us review the claim and then determine whether it's something that we should go to the insurance company for.
You coach them through it.
Yeah,
to
we
make sure
coach
it
them
makes
through it
sense.
to make sure it's a good thing for them to do.
Got it. And then when somebody's buying a house, are you able to see the history from the prior owner of the house.
Yes, we have a system that's called in the insurance business the clue system. And what that does is it allows us to go back and look at all the claims that have occurred through other insurance companies on that house. And that really gives us a good idea of what the experience on the house is. Plus, it's helpful to the new purchasers because they're able to see what had happened and maybe they'll go and make sure it was corrected properly.
Right. If the 3 basement flooding claims on a house, and then on the disclosures they said their basement's perfectly dry, there's an
You
inconsistency.
definitely want to check into that for sure.
Yeah,
There's been 3 floodings.
Yes.
Yeah.
And for those people purchasing, one of the things in our local contract here in DC, Maryland, Virginia, the financing contingency does require that you apply for your homeowner's insurance within 7 days of your contract being ratified. One of the reasons for that is it does allow you as a buyer to uncover if there's some hidden issue there that makes a house more expensive to insure or even uninsurable. At least you want to know early on before we.
Yeah.
You just need to get that early on, yes. Yeah. All right. Lewis, if somebody wants to reach you, what's the best phone number for them to call you at?
Well, our agency's up in Germantown, Maryland, and our number is 301-428-3344. Thanks.
Yeah, and I know you have insured many of our clients and myself personally, and I've been really happy with the services you provide.
We appreciate everything you've
Yes.
sent us, and we're willing to go out same-day service and do whatever we need to do.
Excellent.
Thanks,
Thank
Ron.
you for being. Appreciate it.